So, Technology Metals, a vanadium development company, so leading the charge in the vanadium industry. So, obligatory disclaimer. So basically we're here to talk about what's a world-class vanadium development opportunity in Western Australia. Vanadium's been a standout commodity over the last 18 months or 2 years or so. We're fortunate that we've got one of the largest, highest grade deposits in the world in Western Australia. Completed a pre-feasibility study in June of this year and are now launched into a full feasibility study targeting June quarter of next year. And the bottom line there, importantly, we compare very favourably to the peer group in the vanadium industry. Corporate overview, a bit similar to the previous speaker. We're a fairly new company. We listed in December 2016, so we've only got 70 million shares on issue. We had a $4 million raise in an IPO, and that IPO was based on these assets. So we've picked up these assets and we've progressed them, as I say, all the way through feasibility into the definitive feasibility stage. So I won't linger too much longer on that one. Team of people that actually brought the company to the market, but importantly on the right hand side there, all the team of consultants that we've engaged to assist us through the feasibility studies. Got expertise across the processing side as well as obviously in the mining and resource side, and the bottom one there, very, very importantly, the team that helped us around the environmental permitting and the heritage side of things. There's a perfect storm in vanadium at the moment, and we've seen it just even recently in the last couple of weeks that price has just gone off the chart, as you can see. We listed in December 16, the price was sub $5. We're now over $30 a pound. Had a very, very significant run up. Very much around the steel industry. So the vanadium prices being driven by a shortage of supply coming out of China. Environmental regulations are impacting on the supply side. At the same time, the Chinese are embarking on a increased intensity of use in their steel. So much more vanadium is going to be required. So we're seeing this really tight market has emerged. We can see as of last year there was already a deficit in the market, and that deficit's only getting greater. Even if we build in all of the existing producers and brownfields operations that will come back online potentially, plus a whole bunch of operations out of China that have been currently shut down because of environmental restrictions, you can see on that chart that demand continues to outstrip supply. So by 2021 there's a really large gap emerging in the demand side, and by 2025 the forecasts are for a very, very significant deficit in that market. And obviously for us there's a real opportunity for primary producers to enter that market. So where we are in Western Australia, the Murchison province, about 800 kilometres north of Perth. It's an established mining district, a lot of gold mining in the area as well as some base metals mining. Sealed highway runs right past the door, very, very close to port access. All the infrastructure is in place for us. Very large resource, 120 million tonnes at 0.8, and we'll touch on that a bit further on, but that is a globally significant resource size. Importantly, that high grade component, 55 million tonnes at 1.1%. Right up there on amongst our peer groups. And part of the PFS, we delivered our maiden reserve. That study was only based on 21 million tonnes out of our total 120 million tonne of resource. So we could only use the indicated component of our resource. So that's delivered us a 16.7 million tonne reserve. Bit of a snapshot of geology. I'm a geologist and an exploration geologist, but it was a bit of a no-brainer. The stuff outcrops, you can map it along the ridge line, so it's really wheel up the drill rig and drill it out. Fantastic continuity of mineralisation, very visual, so is it a dream deposit to drill out. As you can see, we've got the northern block, which is the bulk of our resource, and that's been the focus of our studies through the pre-feasibility study and now into the definitive feasibility study. So a bit of a snapshot of what the PFS told us. So we delivered this in June of this year. So we went from listing in December 16 when there were 8 RC holes on our property to delivering a pre-feasibility study. So 18 months time we delivered this PFS. Already touched on the reserve size and that high grade resource. Looking at using standard processing technology, so salt, roast, water, leach. So that is the the standard route that's being used currently in the world. So Largo Resources out of Canada, who are the current, I guess, the only real pure play vanadium producer. They've got an operation in Brazil, and so our flow sheet is very, very similar to theirs. 13,000 tonnes per annum of V2O5 would be the largest single standalone pure play vanadium production asset in the world. Currently 13-year mine life. I'll show you shortly how we're going to be extending that with the further drilling that we've completed. Importantly, that OPEX, $4.27 a pound. Currently we're at $31.50 or thereabouts a pound in the commodity price, but importantly that $4.27 is lowest quartile costs of production. So we all know that it's a cyclic industry, so the price will come down at some point in the future. We're looking at a 25-year plus mine life, so having our operating costs down at that low level is very, very important to us. All those metrics gives us a really short payback time, 2.5 years or less on our 380 million Australian capital expenditure. And some fantastic metrics on the IRRs and MPVs based on a $13 a pound long-term price. And again, currently at $30 plus. So, important slide in that this demonstrates that we've done all of the metallurgical test work with our ore body, taking it from the raw ore all the way through to a final product to confirm the flow sheet that we've used in the PFS is going to be applicable to our ore. Really, really important, the yellow powder at the bottom, that's the final product, that's the V2O5. We've now delivered a 99.53% product. So the benchmark pricing is around 98%, that's what goes into the steel industry. If you're going to go into the specialty batteries and chemical industry, 99.5 is the holy grail. We can produce that with a very standard process flow sheet and not using any acids or any nasty chemicals. So we've got a really clean ore, which gives us a clean final product, which is very important. I guess now into the DFS. So we've delivered the PFS in June. By July we'd started the DFS and progressing that very, very rapidly. Key to that was launching into a pretty major drilling program. We've been drilling for the last 2 months, basically double shift with 2 rigs, so significant amount of diamond drilling as well as some more RC drilling to bolster the resource, increase our indicated resource, and therefore that'll flow through to a larger reserve. We've also just collected a large bulk sample that will be going through a pilot plant study on the kiln side of things in the next little while. And importantly, progressing all of the detailed process plant design work and getting all the engineering up to spec to get out for pricing around the DFS. So as it says there, on track for delivery of that in the June quarter of next year. So this is what we really focused on the last couple of months with our drilling. So we've done some drilling at depth below the PFS pit design. We've also done some drilling into our footwall. So part of the PFS came back and said you don't have enough data in your footwall, so the engineers used a very conservative slope on that footwall, 40-degree slope angle in a very solid rock, very solid gabbro. So we expect that to steepen significantly, which will bring down our strip ratio and therefore bring down our operating costs. So we've done that drilling now. All that data confirms what we'd expected. We're now in the hands of the geotechs to come back with those numbers, but that's the expectation is we'll steepen that footwall. And the deep drilling, as you can see on that slide, the pits from the PFS were limited by drilling, so there was no drilling beneath the actual pit designs. We've now put in holes on every section at depth. We've extended the mineralisation 25 to 50 metres below the base of those pits, and awaiting assays and all that, but it's such a visual ore body, so we know that we've hit the zone. So we're expecting those pits to go much deeper, therefore our reserve resource is going to grow significantly. Bit of a timeline, as I say, June 2018 was the delivery of the PFS. We've now pushed through to completing that big drill out phase. We've got some ongoing metallurgical test work. We've got a site sample going through a kiln in the next little while, which is going to give us another bunch of final product that we can send off to potential customers. And then that's the next point on that slide, talking about discussions with off-takers, end users, and starting to really build up those relationships with the industry. The quality of our product gives us a really good head start on those discussions, so really, really important. Resource upgrade by probably late end of January, early February of next year, and then we move through, as I say, to delivering the DFS by the end of the second quarter next year. The last of the slides shows really importantly where we sit relative to our peer group. So the two on the far left, Vametco and Largo, are two existing operations. Everyone else on that slide is is in some sort of a study or exploration phase. As you can see, we're sitting there third as the next highest grade, very large resource, really compelling project to move into production. So, bit of a summary, but really it gets summarised for me in that we've got a very large, long life, low cost development opportunity in the vanadium space, which is absolutely going gangbusters at the moment. So thank you very much.